We're all taught to win. It's kind of wired into us from day one, right? But what if the real secret to success, especially in a high-stakes game like trading, comes from a totally different skill? Today, we're diving into a powerful idea from the trader Tom Hougaard. To truly win, you first got to become the best loser.
Seriously, just think about that for a second. Everything we're taught is about avoiding failure at all costs. But what if, in the world of trading, embracing and actually getting good at losing is the key to long-term success? That's the core question we're going to unpack right now. All right, first step, let's talk about the winning paradox. This is all about the massive gap between how most people think trading works and how the pros actually, win at it. So most people are laser focused on the left side of the screen. They're obsessed with their win rate, trying to be right as often as possible, because let's face it, it feels good. But the pros, they live and breathe by the principle on the right. They understand that you can be wrong more often than you're right and still be insanely profitable, just as long as your wins are way, way bigger than your losses. It's all about that asymmetry. This brings us to the real battlefield. And here's a spoiler. It's not you against the market or you against the news. According to Hougaard, the toughest opponent you will ever face is the one looking back at you in the mirror. Look, you could have the most brilliant, back-tested trading strategy in the world. You could know all the patterns, all the indicators, but absolutely none of it matters if your mind isn't trained to actually execute that plan when the pressure is on. And here they are, the usual suspects. Fear. It makes you panic and cut your winning trades way too early. Greed has you holding on to losers for dear life, just praying they'll turn around. Hesitation makes you miss that perfect entry you were waiting for. And overconfidence, well, a couple of good trades can make you feel invincible, and that's when you make your biggest mistakes. These emotions are absolute plan killers. This really just hits the nail on the head, doesn't it? Most traders don't blow up because their strategy was bad. They fail because their emotions got in the driver's seat and completely wrecked their ability to execute that strategy. The real edge isn't in your charts, it's between your ears. So, if the problem is psychological, well, the solution has to be too. It's all about building a disciplined mindset that can handle the market's emotional roller coaster. So let's break down what that discipline actually looks like. It really comes down to these 3 key practices. First, you've got to regulate your reactions. That means not getting too hyped up on a win or too crushed by a loss. Second, you have to detach from the outcome of any single trade. Your only job is to follow your process, period, not to be right. And third, and this one's the tough one, you have to learn to accept being uncomfortable. Holding a winning trade while it racks up huge gains, that's uncomfortable. Just like taking a planned loss is painful. You have to train yourself to do it anyway. Okay, so how does this whole mindset thing actually translate into making money? Well, it creates a very real mathematical advantage. It's called the asymmetry edge. This picture makes the whole concept crystal clear. See that little red bar on the left? That's your controlled loss. You cut it quickly, decisively, exactly like your plan told you to. But that giant green bar, that's a winner you had the discipline to let run. Just look at it. One of those big green wins can wipe out 5, 6, maybe even 10 of those small planned losses and still leave you with a healthy profit. This is the rule that puts everything into practice. You are actively engineering this imbalance. Your losses are kept tiny because they're predefined before you even enter the trade. Meanwhile, your winners are given the room they need to grow into something huge. This is not about luck. It is a deliberate system built on a foundation of psychological control. And that brings us to the final piece of the puzzle. This isn't about one amazing trade or one good week. It's about building a repeatable process, a system that makes good decisions your default setting over the long haul. This table just lays it all out, doesn't it? The amateur is completely obsessed with the outcome of one trade. Did I make money? Was I right? Their ego is all tangled up in it. But the pro? They're obsessed with the process. They only ask one question. Did I follow my rules? For them, a loss isn't some personal failure. It's just data. It's tuition that they paid to the market for a really valuable lesson. This right here, this is the mental flip that changes everything. Start treating every single loss not as a failure, but as tuition. You're paying for an education. If you systematically study it, each loss pays for a valuable lesson that makes you a smarter, better trader tomorrow. And that's what we want to leave you with. In trading, losing isn't just a possibility. It is a stone-cold 100% certainty. You cannot avoid it. So knowing that, the only thing you can control is what you do with it.
Is that next loss going to be a destructive emotional expense, or will it be a constructive educational investment in your future success? The choice is all yours.